Hello. Hey all, welcome to ShareTreck. This is Raj here, friends. I wanted to just let you know that the markets are still undecided. So the theme for today we'll be discovering it as we go. I tried to do a quick scan of the indices before I started the show, but they were fluctuating a lot. So it's going to be interesting. Let's start off with our regular dashboard. We have here the fear and greed index, and as you can see that we are at 28, and China says no ongoing trade talks with the US, and it calls for canceling unilateral tariffs. So China has become very aggressive right now because they know Trump is in a difficult position. Trump has been signaling that he's going to be very nice to China, that he's going to have a great deal with China. He will be giving them a lot of concessions and so on and so forth. And they have also been indirectly trying to imply that there is talks going on with China. But China has come out and said there is no talks going on, and unless we are treated with respect, we are not going to even start discussion. And for anything to start, you have to remove the unilateral tariffs first. So that's a very strong position. Now, I don't know what Trump is going to do with this, but it seems to me that because of the tariffs, there is a lot of backlog of orders. I believe the CEO of Home Depot, Walmart, and Target, when they met Trump, they gave him a heads up that the shelves will be empty soon and people will start feeling the pressure. And the politician lives and dies by the voters, right? So Trump has got to do something, and at the same time he doesn't like to lose face. So it's going to be interesting to see what he does. But from a retail investor perspective, the most important thing for us is what is the market doing? And the market is not yet made up its decision. Things are in a lot of flux with the futures, and we'll check it all out when we go into trading view. Now, we also have Treasury Secretary Bessent saying that China, US have opportunity for a big deal. Again, another olive branch. And Boeing CEO says China has stopped taking its aircraft amid trade war. So this is hit number one. Hit number two, PepsiCo cuts earnings forecast as it predicts uncertainty in tariffs and consumer spending. Now, there is more companies coming out with earnings, and they are also going to have news, and a good portion of them may have news like what PepsiCo has done. Then you have Trump's U-turns on Powell. China follow dire economic warnings. So economic warnings have been given by the CEOs of those companies as well as other parties, and US officials mull easing tariffs targeting the auto industry. Now, the wording of this particular news article was China specific, and then it brings to question what happens to Mexico and Canada, who already have an agreement with the United States. Will the same standard apply to them, or friends will get really bad treatment and foes will get a much better treatment? So that's anything that is coming out here is not planned, it's not coordinated, and they are not testing it for how various parties would react. It's very amateurish. And Ken Griffin says Trump's trade war has developed into a nonsensical place. That's another way of summing it up. Like, you speak without thinking whom it is going to impact and how it's going to impact yourself, and then you end up negotiating with yourself. That's what is happening with Trump. And China is saying US should revoke unilateral tariffs and denies any talk outright. It says US might say that we have talks daily, but we have not had any talks. And then you have the other hit also. Merck lowers profit outlook, partly due to $200 million expected tariff hit. And world's largest sovereign wealth fund reports 40 billion loss in first quarter on tech downturn. 40 billion is a lot of money. It's not just us retail investors who are feeling the pain. Even the sovereign wealth funds, which play with huge amounts of money, are also feeling the pain. And this cannot be sustained for a long period of time. The president has got to feel the pain of all these things, and he will be forced to act. Now, you have news that Chipotle is seeing a slowdown in consumer spending as 2025 gets off to a rough start. Shares of Gucci owner Kering drop after first quarter sales slump. Southwest to cut flights this year, pulls guidance citing macroeconomic uncertainty. Now, friends, what has happened so far is that we have all this negative news coming in regarding the first quarter. We are going to have projections for the next quarter, which are going to be lackluster. And then I showed you yesterday in my video the earnings projections going down steadily for Q2. All of that is going to impact the stock price, and our decline so far is around 10 to 12%. It has to be more than that, and that's the reason why I'm thinking that probably the market is a bit confused, because when we go to the TradingView platform, you will see, like here is the TradingView platform, and let us go into futures. You will see the futures are still struggling out there just below the 21-day exponential. I would have thought that they would have gone much lower by now. So the news that Trump is waving an olive branch, and the news that China is taking a hardball stance, that thing should push the prices down. But at the same time, I think market is thinking that sooner rather than later, Trump has to fold this tariff war and we'll be back to original. And that's the reason why there is a little bit of positivity, and the shakeout between the negative and the positive is resulting in a 0.36% fall in the S&P 500 futures. When I started my work this morning, it was positive, and then it became slightly negative, and right now it is more negative. So I don't know what will happen when the market opens, but personally, I think that the damage is already done. Walmart, I think, would have paused some orders. Target and Home Depot might have paused some orders while they try to figure out what Trump is going to do with the tariffs, because they may not want to pay tariffs and then lose money while selling it to the customers. And also, if you remember, there are 12 states which have filed a lawsuit against the White House, saying that president doesn't have unilateral powers like this. He cannot use the War Powers Act like this. So many people are taking a neutral stance. They're watching what's happening with the court case. If the court comes and rules that Trump doesn't have the power, then this whole thing is gone, right? So they don't want to jump the gun and end up paying a tariff that shouldn't have been paid and go through the problem. And they know very well that politicians respond to their constituents, and if the shelves are empty, the constituents are going to bug the politicians, and the tariff will have to go. So whichever way you look at it, Trump is looking weaker and weaker. But for us as retail investors, it is not politics. What matters is what is the market doing. The market is going a bit negative today, and I am thinking that if real true sense prevails, we are going to see the price fall, and we should see a big fall today in the market. But again, as a retail investor, that my view may not encompass all the available data that is available, and also past experiences that experienced analysts have in big investment houses. So this is what I am thinking, and I would like to hear from you guys what you think is going to happen with the markets today. I am predicting that it should fall. It should take out at least the support that we have out here at 5314, and maybe it could rest on this diagonal line of support somewhere around 5256 at the end of the day for S&P 500 futures. Likewise for Nasdaq, I am thinking that we need to drop, and this support out here, which was created yesterday, should probably be tested today, and it's going to be a very strong support. So even if Nasdaq ends out here today with a very long wick and a small inverted hammer, red hammer kind of a situation, I would be okay with that, because that I think will be at least reasonable response to what is happening, because things have got worse. Earlier, there was a lot of bluster from the US side, and Trump had the control of the narrative, and now China has the control of the narrative. And I'm thinking that they feel that Trump likes to rebrand and put his name on top of some things. So when they come in, they're going to come in very hard in a strong position, and they're going to negotiate down things so that they have a much more favorable trade deal. And they will allow Trump to go out and, talk like he has beaten China, done this, done that, and whatnot, so that he can save his face. But in the end, they will get a good deal. But for us as retail investors, that day cannot come soon enough, because when that day happens, all our stock prices will start going up. There will be a huge relief rally, and we'll come out of this bear channel. That's the way I'm looking at it. Friends, please let me know what you think about it. And dollar index is also predictably going down. It's getting a support at 99.25. If it breaks that support, then it will have a minor support at 98.32. So I'm thinking that today the dollar index has to test these things, because what US was before China made the statement saying that no talks have taken place, and that they will only talk if all the existing tariffs are removed. Now, from Trump's point of view, if he removed tariffs on China, then he has to remove tariffs on everybody. And then what happens to the minimum 10% tariffs applied across the world? And if China wins this round, then the whole world is going to look at China as the leader. So the stakes are very high. I'm not going to say that Trump is going to fold right away. It's going to take a lot of efforts to bring him back to the normal, because most politicians like to just eat humble pie so that they can still stay in power. But as far as Trump is concerned, his ego is much bigger and his bluster is much higher. So I wouldn't be surprised if we see some kind of a tweet which aggravates the situation, and that can push down the market further. So that's the configuration I'm seeing here, and that can impact the US dollar. So this support line is just a hairbreadth away, and a tweet can send it down. And then we have the 10-year yields, which are at around 4.34. And the difference between the 2-year yield and the 10-year yield is still above 50. It's at 52 as I last checked this morning. So that's again unsustainable in the long run. So things are not looking that great from the indices perspective. Let's go to where we left out yesterday. Yesterday we left out exactly where we said we are going to have hard resistance. It's a confluence of the 21-day exponential at 5395.94 and the diagonal line of resistance, and we ended exactly at just below that at 5375.85, and we were supported by this horizontal line of support, which was earlier a resistance, because if you remember, we were out here when we started the day. We gapped up, opened above this diagonal line of resistance, and converted that into a diagonal line of support, and that's going to be the support for today. Resistance continues to be the 21-day exponential and the diagonal line of resistance, which is going to be coinciding with the horizontal line of support that we have here at 5377.87. They are jointly going to be the support for today, and the next line of support is going to be the 9-day exponential, which is sitting at 5311.94, and our resistance for today is very high. It's the 50-day exponential at 5577.97. At the most, I would say that we could have a minor line of resistance, which I would say could be somewhere out here, somewhere around 5488.82. I'm going to mark the minor line of resistance with a slightly different color. I'll say yellow, so, or orange. Orange would be the best indicator. So it's going to be that's going to be a possible place where we may hesitate, but the real resistance is the 50-day exponential. Now next, let's go on to NASDAQ. NASDAQ is also got the same bearish pennant design out here, and yesterday, as we said, that we are going to be halted by the 21-day exponential and this diagonal line of resistance. It definitely happened during the day. We started very high and then we started coming down, and we ended below both the 21-day exponential and the two diagonal lines of resistance we have. So for today, the resistance is going to be 18,727.61, which is a diagonal line of resistance, and we are also going to have resistance from the 21-day exponential moving average. And if you look at the MACD and the momentum, MACD is bullish, but momentum in all cases is still below the 50% mark. The RSI is still below average, momentum is below average. So that needs to pick up for things to look better. If you look at QQQ, we are down just a mild 15.15%. So the pre-market participants are also scared to do anything. So there are various components of the markets which are interrelated with each other. I see that in pre-market, the interrelation is not reflected in the pricing. I'm talking about FNGD and FNGB as related to Meta and all the Max 7s. There is no correlation out there in the pre-market action. So the pre-market is disorganized right now, so we can't go by it. Next, we also have 21-day exponential as the resistance for QQQ today, and the first support is going to be 450.09. I'm going to mark this green, and the second support is going to be around 447.84, which also I'm going to mark green. These are the two supports. We have the 9-day exponential in between out there also providing support. The resistance today is going to be 469.03. I don't think we are going to be able to go above that unless Trump comes out and says, okay, but guys, I was just kidding with the tariffs. I'm more concerned with my constituents, so I'm just going to do a compromise with China. And if he comes out and says like that, then we can see everything go up like a zoom. I don't see that happening right now. Wix is also picking up slowly. It's above this diagonal line of support. It's gone up 0.39% in the morning. It's also in a wait and watch mood because the Wix in the pre-market is also impacted by pre-market action. So that's the reason why I'm thinking that the markets are a little bit confused. When the market opens and the retail investors start the day and the professional investors start the day, and the interplay of all those will potentially lead us to where we should be. And also expect some sound bites from the White House, because what China has said is like poking the bear, and Trump is likely to respond because his ego will prevent him from being quiet. Let's look at put call ratio. It is mild to bullish. It's almost more mild. 1 is mild, 0.7 is bullish, it's at 0.9. And gold is picking up with relation to all these uncertainties. It's getting support from the 9-day exponential out here, and the 9-day exponential is sitting at 3298.75, and it's kind of gold is just on top of that. And I think that will hold for today, given all the confusion that we have all around the place. And one of the things I want to point to you, my friends, is that all the companies under the 200-day, above the 200-day exponential moving average in S&P 500, if you look at it, there are only 30% of companies which are at that stage, which means a wide breadth of companies in the stock market have gone down below that 200-day exponential moving average. And then we only have 26.83% of companies which are above their 50-day average. And those kind of numbers definitely indicate the weakness in the market overall. That said, let us go and look at our AI, our actual indices, and then go further. S&P 500, we stopped exactly where we said we would, and we are still in the bearish pennant, and we have to break out on the downside. Momentum is still below average. And Nasdaq also, I'm summarizing, is in the bearish pennant, and we had to break down on the downside. Momentum is also below average. So with that said, let's go and look at NVDA. Now NVDA is up 0.11% in pre-market trades, and it has got a support at 101.96 and another support at 100.94, and its resistance is going to be the 9-day exponential sitting at around 103.32, and the next resistance for it is going to be 106.13. And then we have Meta, which is down 0.37%, and it has got a support at around 516.41. Right now in pre-market it's at 518.81, and the support at 516.41 is extremely strong because it is joined by the 9-day exponential moving average, which is also in the same vicinity. So between the two of them, they are going to provide extreme support. And then our resistance is going to be the 21-day exponential at 541.29 for Meta. If you would notice that MACD is still bearish, though trying to mend, and the momentum is below average, though trying to pick up. Whether it will pick up or not, that's where we are having the indecision in the pre-market session. Google is down 0.15% in pre-market session, and yesterday it was held down by the 21-day exponential and the diagonal line of resistance, and that's what we said would happen. And we also said that the 9-day exponential would be a resistance. That was converted into a support in yesterday's action, and for today 9-day exponential is going to be the first level of support for Google, and the first resistance is the 21-day exponential, and the second resistance is going to be let me see what we have out here. I have to just pull this out a little bit, so please bear with me. This is a dynamic resistance. So our resistance today is going to be 158.58. That is the second level of resistance for Google for today. So that's what we are looking at out here. And then I think the next one that we have to look at is Amazon. Amazon is up 0.29% in pre-market trades, and therefore our support at 180.27 remains intact. And then our resistance is going to be the 21-day exponential at 182.91, and the resistance at the horizontal line of resistance at 184.19. Again, notice that momentum is below average. MACD is just about bullish. And then we have Apple down 0.28% in pre-market trades. Resistance continues to be 207.41. The first support is the 21-day exponential at 203.37, and the second support is a very strong support at 199.02, which is a horizontal line of support. along with the 9-day exponential moving average. They are jointly providing a very strong support today for Apple, somewhere around 199.16 and $119 in that range. MACD is pretty bullish. Momentum is also at almost close to average. So I think Apple has got a good chance of kind of staying within this range of these two resistances that we are looking at, the two horizontal lines. And then we have Microsoft, which is up 0.08% in pre-market trades. It's going to have support from the 9-day exponential and resistance from the 21-day exponential. 9-day exponential is at 372.53. 21-day exponential is at 376.92. Between them, it's like it's holding the price out there, and if it goes down, it will get a support of 367.73. If it goes up, it's going to get a resistance of 379.79. That is the range for Microsoft for today. MACD is bearish and momentum is still below average. And if you look at Tesla, it's down 0.46%, and it still has a support out here at 250.25, and the current price in the pre-market session is 249.55, which is sitting just below it. So I'm not going to say this is a support or a resistance. I don't want to jinx the process for today. So I would say that if we open below 250.58, this will be the first resistance, and the 21-day exponential, which is sitting at 251.69, will be the second resistance, and the third resistance will be 256.27. I expect all these three resistances to be tested today, and then I'm thinking that the first level of support is going to be 242.13. Second level of support is going to be 233.34. I'm thinking that both these supports might potentially be tested today because the volatility will be much higher. The ball is in the White House court, and Trump has to do something to prove to the people that he's serious about negotiation. And he also has got to do something to prove that he's serious about tariff without pushing the Chinese much further and getting into a point of no return. So we'll have to see what happens, and that's going to create volatility during the day. Various people are going to talk about various things, and that's also going to add to the volatility. Then we'll have commentators in CNBC, Bloomberg, and others who will have an influence on the market. So I'm thinking that today is going to be a very volatile day, and Oracle is down 0.31%. It still has resistance at 135.93 from the 21-day exponential and the horizontal line of support, a very strong resistance which worked yesterday, and it's going to work again today. And for support, it's got the 9-day exponential at 130.32, and for today, the diagonal line of support is going to be at 129.40. So this is the range of movement for Oracle. If you look at AMD, it's down 0.11%. And the 9-day exponential is going to be the first level of support. The second level of support is the dynamic diagonal line of support at 89.13. So these are the two supports for AMD, and the resistance for AMD is the 21-day exponential at 93.41. Failing which we have the resistance at 96.13. So this is the range in which I expect AMD to move today. SMCI is up 1.70%, and it has got support from the 9-day exponential moving average, which is at around 32.14. And we also have the diagonal line of resistance, the dynamic line of support from a previous bear channel, and that is at 31.69. So these two are going to be the support for today, and the resistance for today is going to be the 21-day exponential at 33.82, failing which we have resistance at 34.78. And looking at past performance, I'm thinking that this range is sufficient for SMCI today. And let's look at Broadcom, and Broadcom is down 0.43% in pre-market trades. It has got immediate support at 21-day exponential at 174.77, then at the 9-day exponential at 172.51, which are these two wavy lines that we see here, and it has got a resistance at 179.02, which is the horizontal line of resistance, and the 200-day exponential at 181.22. I'm thinking this is sufficient range for AVGO today. Then we look at Palantir, which is up 0.08%, and it's kind of trying to push through this resistance at 101.71. Right now it's at 100.90 in pre-market action. So our first resistance is 101.71. And the second resistance is going to be, let me just thicken this line. This is the line of resistance that we have at 124.80. That's going to be the next line of resistance for us for Palantir. So if we break this, I think Palantir is going to look pretty good, because we also have a price target for Palantir out here at 125.92, and that has not yet been met. So the double bottom has got triggered. That's the way I'm looking at it, and I'm thinking that it will have a potential to go up to 126.15. Again, friends, these are my personal opinions and not financial advice, so please do your own due diligence before placing any trades or anything. And also please give me a feedback if you think that some of my analysis are wrong, or there is some fundamental reasons why the analysis results may be wrong. SMH is up 1.06% in pre-market action, and it's at 201.01, and we have this support at 197.69, which is going to act as the support for today. And we also have a resistance at 201.52. That's going to be the first level of resistance. And then we have the 21-day exponential sitting at 202.20, which is the next resistance for us. So these are the two resistances that I see for SMH today. FNGB is up 2.50%. I would have expected FNGB to be negative today, given that many of the constituents here are negative. And if not negative, at least not so very positive. And I would have expected FNGD to be not so negative, but at least closer to positive, but that has not happened. So these things are likely to change very fast when the market opens. So that's my hope out there. And then I'm going to just look at Tempus AI and give a feedback out here on what's going to happen with Tempus AI. So I'm looking at the pre-market price action. It is just up to 0.02%. That's around a cent, and it's at 49.56. So this diagonal line of this dynamic diagonal line of support is going to be at around 40.95 for today. So this is going to be one of the supports. And then we have this horizontal line of resistance, which is at 43.04. I'll have to convert this also into a support. And we have got the 9-day and the 21-day exponential moving average sitting in the range of 43.76 to 45.15. Those also happen to be the support for today. And if you can see the candle out here, this is the candle from yesterday. It gapped up in the morning and it remained much elevated, and as a result of which it has converted the 200-day and the 50-day exponential also into a support. Now we are moving into a position where we are going to start seeing golden crosses. So I'm thinking Tempus AI is moving into position of strength, and pre-market it's up 10 cents already. So its resistance happens to be the 100-day exponential sitting at 49.77. That's the first resistance. And the second resistance for it today is going to be at 51.52, which is this dynamic diagonal line of resistance. If it breaks through these two, then the next resistance I think is going to be 59.60. MACD is looking good. Momentum is also above average. So I think Tempus is likely to do very well today. And with that said, my friends, I would like to go and check our chat section and see where we are with that. And I think we have got around a few viewers out there along with Hot Dog. So thanks to all of you for joining me. If you have any tickers that you want me to have a look at, please let me know. Or if you would like to share your thoughts about what's likely to happen in the market, and if you think that I'm wrong on some of those things, please put it in the chat section so that I can try to recalibrate my thoughts and do a little bit more of research to validate what you tell me. Okay, I'm going to wait for a few seconds because there's a delay in everything reaching from me to you. There's a lag in YouTube. So I'm going to wait for that and we'll see. Okay, so I haven't got anything yet, so I'm gonna wait a few seconds and then say, okay guys, well then, so what I would recommend is that as and when you get any thoughts, start putting in the chat sections. Once I have done with my analysis, I'll start reading the chat section and start responding to them. And it's the main benefit for me. It helps me a lot when you guys give me some feedback. With that said, I would like to end the session today. If you like this video, please press a like out there. Please continue to tune in with me as I try to improve myself as a live stream retail investor trying to broadcast. Thanks for all your patience. Sorry about yesterday, and I'll see you again tomorrow. Bye for now.